Hey, what is up everyone? It's David here. In this video, me and we are going to talk about beauty and personal care products. And that company is Adore Beauty. Now, e-commerce companies are very near and dear to me. So I'm going to think out loud and walk you through my preliminary research process, just so that you can understand my logic behind whether I'm going to invest more time researching this company. This is definitely going to be a longer video, so I'll leave timestamps in the description box below, so feel free to jump to a section, whatever that interests you the most. And of course, I will wrap up this video with a portfolio update. As usual, because I am just some random Asian dude you found on the internet,
I am not a professional,
and therefore this video is not financial advice or recommendation to do anything. The only thing I'm qualified to recommend is you gently smashing that like button or leave a comment about my bad hairstyle. Without further ado, let's go! Before I get started, no, I don't have a position in this company. I'm just merely interested. And my preliminary research process is pretty simple. I just want to understand the business. I want to understand the people behind the business pushing it forward, and also what are their numbers and trajectory of growth looking like? And when it comes to understanding the business, I'm really just trying to understand how they make money, the key risk, and also the market they're currently operating in. The easiest way to do this is either via investor presentations, IPO prospectus, or YouTube company CEO talks, if there is any. And the easiest way to find the IPO prospectus is to just Google it. Now, the first thing I'm looking for is how they make money. I already know that they're an e-commerce business. I'm just wondering if there is other revenue streams or other ways that they're making money. And it seems like Adore Beauty generates majority of their revenue via online sales, which is e-commerce, of third-party beauty and personal care products. So that means they are sourcing external brands, storing it in their warehouse, and then just selling it to consumers as they buy them. Okay, what about the market they're currently operating in? So give me a second as I find the relevant information in the prospectus on that. Okay, I found something really useful here. They actually talked about the beauty and personal care market first, and then they further narrowed it down to just the online portion, which is where Adore Beauty predominantly plays in. What's really important about this graph here is that Frost & Sullivan is estimating that the market will grow at 26% compounded over the next 4 years. And what makes a very powerful combination is a growing company, a fast growing company in a fast growing market. Before I dig into the key risks of the business, since this is an e-commerce company, I'm always really interested in the tech that they have and also their marketing channels. So I'm gonna take a look at those sections first before I jump into the key risks. Now, it just so happened that Adore Beauty have documented how they build their AI tech and what they're using it for. So let me quickly summarize this diagram here. Now, they're essentially saying that all of the customer interactions, whether that's you browsing or buying products, will be anonymized and then stored into a data lake, which I assume that when it gets to this point, all of that data will be used to train a model that will put different users and customers into a bucket. And within that bucket, there'll be specific content, products or brands that would enhance your experience. And they won't tell you exactly the step-by-step on how they get there or how they train their model. That's just because that's the secret sauce. If you give it away, then there's no point having that. And all of that will create what they call a personalized store experience. This is pretty common amongst e-commerce companies, especially really well-run e-commerce companies. The next thing I am really interested in is the channel mix. I want to know what channel is bringing in majority of the traffic for the company, because that helps me gauge what the future cost of acquiring a customer is. Let me explain. With something like paid marketing, I like to think of this as renting a space. You have to keep paying rent in order to have that space. So every time you get a new customer, you will have to pour more money for ads. They make a transaction, you make money, and then it kind of starts all over again, on and on. However, this tends to increase your cost of acquiring new customers in the future, because there's only so many people that you can advertise to. At some point, the same people are going to see the same ads, even though it will take a lot of money and a lot of time, but that's just the reality of the paid marketing channel. It does have a diminishing return over time. On the other hand, I like to think of organic search as owning a piece of real estate in the search engine. And for you to do that, there is an upfront investment in time, energy, and money. But once you have that spot, you don't have to keep paying to be at that spot. And that spot in the search engine is likely going to yield more traffic over time. and a portion of that traffic will make a transaction, and you'll have a net profit from that transaction, and you can keep investing in content. So this way of building traffic is more like compound interest. It starts off slow, but then over time, it actually spins faster and faster. So with organic search, it tends to decrease your cost of acquiring customers over time. Even though I am generalizing and simplifying things here, paid marketing tends to increase your cost of acquiring customers in the future, and SEO tends to decrease your cost of acquiring customers in the future. Now, since Adore Beauty generates 37% of all of their traffic via organic search, which is essentially SEO, I am going to do some light digging just to see how sustainable this traffic source is. I have two main things I look for when I do my sanity check. I am looking for a general uptrend on organic traffic and also the breakdown percentage of branded versus non-branded traffic. I'll explain this more in just a second. Now, there are many different tools you can use to check a website's organic traffic profile, but I'm very familiar with SEMrush and I use it on a day-to-day basis for my work, so I'm going to stick with this. Now, this is Adore Beauty's traffic profile for worldwide. So we need the Australian profile first. And then the first thing I'm looking for here is this traffic trend. Now, as you can see, SEO is a compound interest type investment. In the beginning, not much will happen. It's a slow grind. The years and years of work will eventually pay off if you're invested in the right pieces of content, and it does compound your traffic over time. At the same time, you can see different dips here, especially this one. Now, the dips are generally caused by search algorithm updates. Every so often, Google, Bing, or whatever other search engine that you do use, they will update their algorithm, and the algorithm will essentially change different placements of search results, and the different positions of your search results will ultimately impact what traffic you will get. It's perfectly normal to see a dip after an algorithm update, but if you ever see a website or a company that the traffic no longer recovers to the previous height, it means that they might have cheated the SEO process, because you can cheat. And Google will essentially penalize you and you will never get that traffic back. Now, the good thing is, as you can see over time, that traffic have trended upwards, and as it stands, it seems like they are generating approximately 700,000 visits just from their organic channel, which is amazing to see. Now, the next thing I'm looking for is the percentage breakdown of branded versus non-branded traffic. Now, just because you're getting a lot of traffic doesn't mean you're getting the right traffic. And the way to think about this is branded traffic is, for example, me searching for Adore Beauty and I found their website via search by searching their brand. On the other hand, non-branded traffic is, for example, if I'm looking for a Marc Jacobs perfume and I found Adore Beauty's website and I clicked on that result, that will be counted as a non-branded traffic. Now, the important thing to know here is that what we put a lot of emphasis in is non-branded traffic. For people to search for Adore Beauty and found their website, it's very likely they're already customers or they know the brand really well. But for people who have searched Marc Jacobs perfume and found Adore Beauty, the probability of them being a brand new customer is quite high. So from an SEO standpoint, I will prefer a much higher non-branded traffic. One more thing before I move on to the key risks of Adore Beauty. They have been able to create a podcast with 131,000 monthly downloads. That is straight up incredible. I do not know another consumer brand who have been able to create or nail that medium to this level. Now, if you do know any other consumer brands who have been able to create a 131,000 monthly downloads, please let me know in the comment section below. Now, I'm talking about e-commerce companies. I'm not talking about companies who specifically produce podcasts. In saying that, the 1.3 million YouTube views that Adore Beauty has on their YouTube channel, I do believe that it's mostly ad driven, not organic. The way you tell is that if you look at some of the videos that has 20,000 views and 4 comments, that's very obvious that it is ad driven views. Because for a YouTube video to get to 15 or 20,000 views, it requires a lot of engagement, and you can easily tell whether if it's organic views or ad driven views. At the same time, if Adore Beauty's content team can make YouTube work organically, oh my God, good luck to everyone else. So let's talk about the key risks. So performance and reliability of the website database, operating systems, That's up to the IT team. So I wouldn't necessarily think that's a key risk. As long as you have great people, that's easily dealt with. Continued growth of retail e-commerce, I doubt that is a risk at all. The pandemic have shown itself that a lot of that online retail trend is here to stay. That's not going away. New and existing competitors, that's always the case. You always have competitors. There is rarely where there is no competitors. Third-party suppliers and exclusivity of brands. So these two will be more specific to Adore Beauty, and it's probably definitely higher up on the key risks just because they rely a lot on third-party suppliers to generate revenue. And if for whatever reason that third-party suppliers decide to lock Adore Beauty out and only supply to other brands, so that could definitely hurt Adore Beauty. But the way I think about this is that if a third-party brand decides to have an exclusive deal with another distributor, like say Mecca, the traffic that they generate needs to far outweigh the traffic that Adore Beauty can generate. And I don't really see that being the case, because for Adore Beauty to be able to get to this point, they have done some incredible job on the organic side and also the podcast side. I don't really think this is a big deal in my opinion right now, especially if they have really, really good people. Now, recent growth might not be sustainable. That is always the case. Growth companies will eventually plateau out when it comes to their growth. You can't really grow at 30% forever. The growth in online penetration and rate of migration to online platforms, I don't think that is too big of a deal just because of the pandemic is the accelerator to online penetration. So I am going to wait and see on that one. Changing customer preferences, changing tech and attractiveness, all of these can be relatively easily dealt with great people. That may impact the supply chain, but probably more towards the earlier section of the pandemic. Maybe not so much now, but I guess we'll see. Services for third-party banking, our banks are not going away, neither is Telstra and payment logistic providers, so I'm going to ignore that. Inventory management, again, that's a talent thing. As long as you have a great talent, that's not a big problem. Now this, in my opinion, is something that Adore Beauty does not have to worry about, because for a lot of other companies who are so reliant on paid marketing that have not done enough on the organic search side, that is a massive risk. So the fact that they have invested so much in SEO, I'm not even worried about this. Employee, that's with every other company, or responsible expansion into new. Yep, that is basically every other company. And that's it. Now, normally when I do preliminary research, I do have a checklist that I just check off on top of my head as I go through the prospectus. And I have talked about how Adore Beauty makes money. They generate majority of their revenue via e-commerce and via third-party brand products. The current market they're operating in is the online beauty and personal care space. And also some of the key risks are mostly within the third-party suppliers. But more importantly, I do think it's about attracting great talent and retaining great talent. Moving on to the next step, with the management team, I have a personal preference for co-founder-led teams, as well as the co-founders having a big ownership stake in the company. When it comes to the relevant experience point for Adore Beauty, I'm going to ignore that because Adore Beauty was started in the 2000s. In many ways, online retailers are learning from the Adore Beauty case study. So I'm just going to ignore that. And one of the last thing I look at is who else own big stakes in Adore Beauty. So Kate and James are co-founders of Adore Beauty, and together they used to own approximately 40% of the company, and post-offer, they own approximately 21% of the company. What you need to remember is that for IPOs to work, major shareholders will have to sell down their shares in order to make room for public investors. Kate and James still owns 21% of the company, which is a big chunk of the company. Now, Quadrant Growth Fund does own 30% of the company, and it's very likely because they have provided capital during a time where the company needed the most. And of course, if you're taking on that risk, you do need to be rewarded with a higher equity stake. So I'm not too stressed about that, but at the same time, I'll be keeping a close eye on the ownership structure. Now, I'm going to dig into their management team a little bit more, and they have actually made this really easy in their investor website. In the About Us tab, there's a tab for management team. So I actually don't have to go to LinkedIn and stalk anyone this time. Kate and James will be staying in the company as executive directors to watch over the next phase of growth. So I'm not going to make too many comments on that. Tanielle will be the new CEO. And also what I'm most interested in is Dan and Gareth. Now, this is a marketing-led company. So you're really looking for a great marketer and also a great technologist to empower the marketer. When it comes to Dan, you can dig into his background if you want, but actions speak so much louder than words. The fact that he's been able to help the company build a podcast with 131,000 monthly downloads, not to mention a great organic search channel, I think it's more than enough to let us know that he's really good at his job. With Gareth, he's been with Adobe BD since 2015, and it might sound like a long tenure to you, but the fact that he stayed and have became the CTO in 2017, it's saying a lot that the business have chosen to have him and have chosen to retain him. Otherwise, it would have been long gone. And he is working on the mobile application development at the moment. And I have downloaded the Adobe BD app. I'm not going to make too many comments on that at the moment because it's still very, very early for their mobile app. And at the helm is Tanielle, who was a previous MD for Seek in the Americas. Again, she has only became the CEO in August, so we're going to have to wait and see. Again, when it comes to the management team, I do have a checklist that I have put on the screen for you as well. So hopefully that will help you with your future research as well. The last step, and probably the scariest step, is checking the company's numbers. But the good thing is that the more you practice, the easier this is going to get. With this step, I'm just trying to understand the trajectory of growth the company is currently in, and also some business specific metrics just to see whether they're on the right track. So let's start off with the basics and then we'll go through the business specific metrics. To make things a little bit more fun, I've extracted Adobe BD's last 3 years worth of revenue. This is in millions, by the way. And I've also extracted the market size number for online beauty and personal care. As you can see, Adobe BD have been able to increase their market share by 6% compounded annually. And you can see that in 2018, they own about 7.8% of the market, 9%, 9.5% in 2020. It's really good to see that Adobe BD have been able to increase their market share in a growing market. But as online retail becomes more accepted, more players are going to put more emphasis online. So I do think it's going to be harder in the future to extract market share, but we'll see. Now, before we talk about other financial statements, for e-commerce companies, I pay a lot of attention to average order value, their average order frequency, and LTV to CAC ratio. LTV stands for lifetime value, and lifetime value is essentially how much a customer is worth to Adore over the lifespan of being a customer. And CAC stands for customer acquisition cost, how much you're willing to pay for a single customer. To make life really easy for all of us, I've extracted those numbers out. Now, between 2018 to 2020, Adore BD's average order value is between 97 to about $95. And the order frequency is about 1.7 to 1.6 times. Now, if you multiply the 95 by 1.6, you will get an expected lifetime value for that year. So that means if I was a brand new customer that was acquired by Adore BD in 2020, my lifetime value for that year is approximately $152. And if the LTV to CAC ratio is 1.3, that means my customer acquisition cost is about $116. If the gross margin is 31.8%, it means that out of this expected lifetime value of $152, I am making $48 gross profit. And that really just means that Adore BD will have to encourage their customers to make multiple transactions before they can make back their customer acquisition costs. And then only at that point, that's when they will earn real dollars on their customers. The good thing is Adore BD have been able to increase the percentage of active customers throughout the years. And active customers to Adore BD is anyone who have purchased in the last 12 months. At 61.3%, that is incredible to see. And if we look at their cash flow statement, they are operating cash flow positive, which is really good to see. Not to mention, they have approximately 23.8 million worth of cash in their bank account on the 30th of June 2020. That's essentially it on the numbers side of things. Adobe have demonstrated that they are able to capture more market share as the year go by, and that's a clear sign of revenue growth. Yes, you can dig into the current ratio as well, and there's plenty of cash in the bank for Adobe to deploy and capture more of the market share in the future. Because of how impressive it is to build a podcast with 131,000 monthly downloads, not to mention a great organic search channel, I'll be putting Adobe on my watch list, and I'll be spending a little bit more time to understand the business, the future prospects of the business as well. Now, before I do a portfolio update, if you want access to my video scripts and also be part of my fortnightly Q&A, not to mention some additional content pieces, consider supporting this channel via Patreon. Now, I'll leave a link in the description box below for anyone who's interested, but nevertheless, it already means the world that you're watching this video. So thank you very much, and let's jump into a portfolio update. With my CMC market portfolio side of things, it's currently worth 68,000 Australian dollars. Over the last week, I haven't made any changes. I'm just observing, I am learning, and I do need to deploy some capital as well. So over the next couple of weeks, as I deploy them, I will let you know what I decide to invest in. Some of you have asked, how come in some episodes my total return is really high and in some episodes my total return is really low? Now, this is my total return since first purchase, and according to ShareSite, my first purchase is on the 28th of May 2017. So this is looking at the entire period. Now, if I change this to just my last week, you can see that the total return is in single digits. Now, regardless, I am a boring long-term buy and hold investor. So I am happy with what I have right now, and I am certainly very content with my total returns. With my stake portfolio, it's currently worth 22,000 US dollars, which is give or take approximately 30,000 Australian dollars. Again, I haven't made any changes in this portfolio as well because I'm just observing and I'm learning. By now, you would have heard that Tesla will be included in S&P 500, and because of that, the share price have gone way up. And because my ARK ETFs also include Tesla, that have benefited from that as well. Now, there is one more thing I want to share with you. If I include my Bitcoins and also the spare cash I have in stake, my portfolio have officially crossed $100,000. Many people have said to me that the first 100,000 is by far the hardest to cross. And I am so happy to be able to share this moment with you. And I'm hoping that in the future, I can share more of these moments with you as well. Now, as usual, Dropbox and GoPro are not part of my portfolio. They are free stocks that's given to me if you do decide to try stake for yourself. On that note, I am not sponsored by stake, but if you do want to try stake for yourself, I'll leave a link in the description box below. So thank you so much for watching this video all the way to the end. If you have learned something new, consider gently smashing that like button right there, subscribe to my channel and click onto the bell so that when I release future videos, you'll be the first one to know. Now, if you're in the mood for more videos, I have left something on the screen that I think you'll really enjoy. Until next time, my name is David. I'm about to lose my voice, and Otto will always do the honors, and see you very soon.